Hey, so I wanted to check in with Microsoft. Last time we looked at this was a couple weeks ago on July 22nd. At that time, it was trading at 343. Now it's at 322. So roughly a $20 drop in about 2 weeks. They did have earnings come out on the 25th of July. So I'm assuming it must have done bad. We'll take a look at that. We also noted that there's the short-term uptrend on this since January. We'll see if that's still in play. But yeah, the plan is they went over they released their earnings, which is for them their year end. So quarter four 2023. We'll look at those. We'll we'll look at what we were expecting for it. We'll see the actual results. Go through the financial statements. Then we'll take a look at guidance for this company, what they're projecting in the year ahead and the quarter ahead. Then we'll pivot into some news, just see what's been going on with this company for the past couple weeks. See if we can uncover just why it's kind of trending downwards right now. And then we'll look at the technical analysis to see, is 322 a good time to buy? And if it's not, what is a good time to buy? So let's just start off with what were we expecting going into this? For revenue, analysts were expecting $55 billion roughly, with earnings of $2.55. What did they actually do? They got 56 and 269. So two beats. They beat revenue, not by much, but that's kind of normal. But they still beat the expectations. And then earnings per share, again, also beat, I would say a more noticeable beat there. So that can't be it. We'll keep looking. But revenue here, uh, it says for the full year, 8% growth. Gross margins, one of the reasons we love this company, 70% gross margins. So that 56 that they made this quarter, nearly 40 billion of it got to the next level. That's like tremendous. Then operating income, 24 billion. That's 43. So it's gone through the second stage, and it's still close to 50% margins. That's kind of our magic number for gross margins. So to see it at operating, that's really a great job for this company. And then net income down there at $20 billion. Even that's a great number. Uh, Another way to look at this, just percentage wise, I just wanted to pull this to show just a couple revenue streams that I'm going to be looking at, and maybe we can compare this chart to the next quarter's chart to see what kind of develops. But we have highlighted here it looks like about four. The first four are the highest growers and also the revenue streams that we're closely monitoring. So the top growers here, we have Azure and other cloud services. We have Dynamics at 26, Dynamics 365, and Microsoft Cloud at 21%. Those are the top three growers percentage wise. And then I also highlighted Office 365. And so the ones with Office 365 and Dynamics 365, I want to see how that plays out over the next couple quarters, if not the next year and beyond, because those are the two programs that they're looking to incorporate their Copilot AI system into, and they're going to charge these customers more money for that Copilot feature. And so, even without getting new customers, we should see solid revenue growth in both those fields just from existing customers uh, adding on to their current system. We'll see how much percentage that raises it, because what's still unknown to us is what the cost of that add-on is for this company. We know that 365, they're projecting that to be like a $30 additional feature. Not sure about Dynamics yet. Um, but yeah, we don't know what the cost will be. So we'll just interested to see how that plays out. Of course, this is the revenue side, so it doesn't show the net income side or gross margin side, but again, we want to see how that develops with those streams. And then some of the losers I picked out here, again, I wish it showed how much revenue each one of these streams was making, because that would kind of give us how much emphasis should we put on some of these? Because Windows OEM, that was down 12%. I have to imagine it's not one of the bigger lines considering it's so far down the list, but who knows? And then we also have devices at 20% down. Again, I have to imagine that's a smaller revenue stream for them. But again, that one dipped. Everything else was positive. So out of these like 10 items, most things were good, and a handful of them were like 20% growth. So very good here. Let's move on. Here I just wanted to showcase a couple things. Number one, this is from Yahoo Finance. So I don't know if they just didn't update this yet, but they clearly updated the titles here. So for like the current year, this is 2024, which to me, I'm imagining that means next year, considering their fiscal year 2023 just ended. They're saying 213. They just made this year, I believe, 212 right here at the top. So I don't know if they just didn't update that, because here even when it goes to a year ago sales, 192. I don't know if they're what numbers they're picking here, because last year wouldn't that be 198? They're close, but yeah, I'm not sure. So if someone does know, that'd be great. I mean, this gives us an idea, but like they're getting the past information wrong. Like here's 244, but if we go back to that first or second slide, it shows 269. So not sure what's happening there. So I'm not sure how much weight we should put into this, but again, they kind of updated this. This seems wrong here. This current quarter, current estimates are 49.5 billion, but the guidance we'll see later on is going to be a lot higher. But yeah, not sure of that. But I wanted to point that out because we kind of use this from time to time. So to see little differences like that kind of makes us want to pay close attention to that. But moving on to the income statement here, again, we're just highlighting some of the things that seem to stand out to us the most. So we have revenue coming in at close to 212, which was a nice jump from last year, about $14 billion. Cost of revenue only went up about 3, giving us solid gross margins once again. Operating income, again, we saw some of the money kind of trim off from that revenue, and then ultimately we ended up with the same net income. So we made like what 13 to 14 billion dollars more, but we only were able to bring back roughly the same. This was one of their highlights, so maybe I'm just still getting used to this company, but to have this effective tax rate of 19%, to me it seemed like they were bragging about that. So all I know is the tax rate, that's impacting this final figure. That really kind of brought the net income down by close to $6 billion. I'm not sure why their provision for income taxes popped so much. Again, like $6 billion. But if that would have stayed the same relative to the past 2 years, this would have been a big win for this company. So I'm not sure what drove this up so high. So yeah, if you know, please let me know. But they were bragging. To me, it seemed like they were bragging about this tax rate. So I'm not sure what the disconnect between those figures is. There must be some extraordinary event type situation that happened this year that made that number pop like it did. Possibly like a purchase. I know they're working with Activision, but that hasn't gone through yet. So yeah, I'd have to look into that further. And then we have diluted shares here at 968 for the full year. Seems decent. Moving on, balance sheet. Couple things. It's kind of squished together. So, but I highlighted some items here. Cash, big pop there. It went from like 14 billion last year to right now it's like 34, 35 billion. So I have to imagine again beginning to prepare for that Activision deal. Uh, I believe that's like $69 billion. So yeah, they need more cash, but that's a healthy amount just to be sitting there. Overall balance sheet cash or short term total cash equivalents, and short term investments, that overall went up about uh, like $7 to $8 billion. Total current assets, that went up a fair amount, mainly driven by the cash though, roughly half of that. Total current assets 184 billion, total current liabilities 104 billion. So they're fine there. Again, tons of cash, enough to cover accounts payable, their current portion of the long-term debt, accrued like pretty much a fair portion. The biggest liability that they have is a good one. It's a short-term unearned revenue. And so what I imagine that is most likely is subscription-based type items. You rent office for say the full 12 months, but it might only be the first month, but you already paid for the full year. So as the year passes, they earn that money. So it's nice to see this here, that a solid amount kind of grew compared to last year, but I think that's a good liability for them to have. Also, we had equity investments that went up significantly compared to last year. Other long-term income that also we saw grew about 50%. Not sure what that's involving. Possibly the AI chat GPT type thing. I guess the only other thing, I forgot to highlight it, but the property and equipment, we're going to bring that up, I think, a little later on. But that one grew close to $20 billion. So quite a bit of changes here on the balance sheet. Nothing crazy outside of, like, say, property. And let's just go into the cash flow statement here. So some of the bigger changes, again, I'm pointing out stock-based compensation. That went up a decent amount. Accounts receivable, that went down slightly. Accounts payable, that changed quite a bit. Net cash from operations, though, relatively flat based on the year to year. Still tremendous, though. Repayments of debts, they didn't repay that much. Common stock repurchase, made a lot of that, but less than last year. Net cash from financing pulled back a bit, which is good for them. Investing, additions to property, they continue to make that. Acquisition of companies, that fell down a lot. So they didn't make as many acquisitions this year, even though the news was so much about that Activision deal. We also have purchases of investments, that going up. Maturities of investments, so they got a lot of cash from that. Sales of investments, they didn't get as much of that compared to last year. Again, it's just timing, or they needed the money last year where this year they didn't need to. Overall net cash used in investing, we see that pull back a little bit, so they didn't spend as much, which again is good for them. Some of the guidance here. So the guidance that they projected is between about 54 and 55 billion. Currently, the analysts, they're thinking 55 billion. That's what they want to see. So again, going back to this, clearly it's just not updated. It has to be outdated. It's surprising to see it on a company like this, where so many analysts seem to monitor it, but yeah, because revenue here, even the high estimate is 50 billion, but here we have guidance saying 54. So something's off here. So I don't know if, like, maybe we need to be looking at this one, even though the date, the heading at the top is wrong. But that seems at least within reason, 53. So I'm not going to give too much weight to this information because, again, I think it's a little wrong. But that's guidance for us. This is another tracking system. I forget which website. I think it's called like Seeking Alpha. They use, this was their projections. This seems more appropriate. Here they're projecting 55.49. If we go back, that's actually high. So they're thinking they're going to beat, which would be year-over-year growth of about 7%. They think it's going to reaccelerate the growth. And if that happens, that would be tremendous. Year end, they're thinking 62. For the full year, we have about 200, 210, like 220. If we go back to this, I don't know, like 220 would be the high end, I guess. I just think this chart needs to be updated, but I know I reference it on other companies, so just makes me a little more wary about it, but maybe it's just a mistake here. So moving on to the news, this is really all I could find to fully understand why it's been pulled back or been pulling back since earnings. Because again, it looks like it was wins. You know, they beat on revenue, beat on earnings. So what's kind of going on? They mentioned that they were planning on increasing investments into their Capex and for their AI spend sequentially quarter over quarter for the next year, potentially beyond. And that's really all I could see in terms of a worry. So if we just flip back to, I guess, the income statement here, balance sheet. I mean, Capex here. I mean, we did point out the property and equipment that definitely ballooned. If they think that's going to continue in that fashion, I can understand that. If we go to the cash flows, again, purchase of investments that did go up. So that would be the capital expenditures, additions of property again at like 28. That's definitely increased, but kind of flat, I suppose. But the combination of the two, I mean, they've experienced this like 2 years ago, a kind of a big balloon of like 80 billion. They're currently at like 60, 65. So we'll see how much that goes. That'll be the big question. And then as far as the AI investment, I'm not sure where that would show outside of maybe cost of revenue. That one seems to be staying within reason, but if that starts to balloon, yeah, that would definitely hurt the margins. Hopefully not much. It's already so high that I don't think that would really hurt the company in my eyes, but you know, it would definitely lower expectations. But that's really all I could see of why this one keeps pulling back. Um, yeah, if something else comes up about it, by all means, I'll be looking into it. But so for some of the other news items, it looks like the UK regulators are aiming for a decision on that Microsoft and Activision deal by the end of August, and that deal was for $69 billion. So it looks like Microsoft is going to get this deal. Haven't heard that they weren't going to get it, but less than a month until we hear the final decision. We also found that the former Amazon exec, this Punit Chandok, is going to lead Microsoft's India and South Asia operations. He's coming from Amazon from their AWS line, where he also led the India South Asian operation of AWS. He's now with Microsoft and going to lead their India South Asia office soon on September 1st. So we'll see what kind of impact that has for Microsoft. It'll be nice if they break out their revenues geographically to see what kind of impact he has, if any. We also saw that Microsoft was under a Russia-linked hack behind dozens of Teams phishing attacks. So the Russian government-linked hacking group engaged users in Microsoft Teams chats, pretending to be like tech support, software support. Not sure how many companies were impacted, but that was what was discovered. Some Russian government group targeting, didn't go into which companies were targeted or impacted, but this was found and apparently it resolved. But something that was interesting. That popped up. They're also looking to get into banking here. So the London Stock Exchange Group is teaming up with Microsoft to develop AI models. Again, working with Microsoft and several banks to create bespoke generative artificial intelligence models. The financial services industry is looking to harness the technology without exposing proprietary data. So we will see what they come up with. If anyone were to come up with something, Microsoft seems like the easy winner to get into that. Not sure what banks use in terms of communication, but if they're using Teams, this would just be a nice, again, an add-on feature to add an AI type co-pilot feature onto Office 365 or whatever kind of maybe dynamics. Again, we'll see how that plays out. Didn't mention any money, but the fact that they're already looking to Microsoft to build something for them, that is going to be huge. It's geographically, again, London, not as large as the United States, but still, it's a healthy size in terms of money. They also mentioned that they're looking into a face reader. So the tech firm is seeking to patent a high sensitivity facial recognition reader. They're taking a dive into their artificial reality headsets. They're looking to patent some things, and yeah, they're just looking to build out that artificial reality VR headset type things. A couple other things before we go into the technicals. We have Microsoft teamed up with this Aptos Labs on a new blockchain. So this could potentially work with that London Stock Exchange. If that could be a way that they could kind of, how do I say it, like hide the proprietary data of banks through using blockchain. Just an idea, but that's apparently something that Microsoft wants to look into, developing a blockchain with their AI feature. Aptos Labs, these guys were, I believe, part of Meta's team. They decided to branch off, do their own thing, and here now Microsoft is looking to evolve some sort of new blockchain AI tool with that team. So we'll see how that plays out. And then the last thing here, we kind of mentioned it earlier that Microsoft is launching an AI-powered software for frontline workers, which is believed to be this co-pilot for Dynamics 365 Field ServiceNow. We'll see what the impact of that one is as well. Didn't go into any figures or anything, but they're putting it out there, and we'll see how it impacts in terms of revenue, costs. Very interested because this seems like a very powerful update and potentially worth the money. But yeah, until we get the results, that's when we can really dig into it. But it seems like it's going to be good. We just don't know how much of an impact it'll make for a company this large. But it should be an overall positive one. But yeah, let's now pivot into the technical chart. So yeah, it's been going down. As I mentioned earlier, last time we looked at this, and last time was 343. Let me just get this out. We had buy points at 333, 281, 342 potentially, resistance at 343, and 370. Also noting a short-term uptrend since the beginning of the year, and to buy the dips. This is a dip if I've ever seen one. So already I'm thinking this is probably going to be a buy. But let's start with where we were before. So 722, that was probably, I guess, the end of the week here on this little red bar. That was like the peak. And I actually said it was fair value, meaning like I would have been okay at this price point. Looking at my data that I have on this tracker, I have to imagine it was two reasons. Number one, when we look at the purple uptrend range, it's definitely closing in on the middle. still on the high side, but because it wasn't at like the peak or above peak, I put it as blue. So that's one reason why we had it there. The second one is um, it was just the thought that if this one reaches new all-time highs, we've seen it many times in the past where when a company reaches new all-time highs, that it just takes off. And this is, we can see kind of how I was interpreting it, because here we have this box up here. We went the complete opposite direction. This is going to need to get pulled back in a major way here. Unless something good comes out, I'm gonna play it safe and put it here. But we could just flow right back into this original estimate of what I thought the stock price would be at year end. Uh, Again, we'll just continue to watch it, probably on a more consistent basis to make sure we get the prices we want, really. Uh, but to continue updating this, so 343, we dropped down to 322. That's wild. Uh, so the buy points, we had 281, which is this green point way down here. Not sure if we'll pull back that far. If we just go back in time, 380 seemed like a support line. It got above it once, caught itself back in 2021, stayed above again in early 22. It seemed to catch itself around 280. Then it finally broke, and then it did all kinds of stuff. And then more recently, in this year, when it broke 280, it seemed to want to pull back below it, but it couldn't. And so now here we are. Will it pull all the way back to 281? I kind of have my doubts, but it is definitely on the table now that it appears to have broken this uptrend. Potentially what could happen is, again, we try to keep it as narrow as possible to get the most, or like the best deals. I mean, honestly, what we could do is just pull this down a little bit. Either way, it would still be at the buy point. That would just, the reason for pulling that chart down a little bit would just to be to say, yes, it is still in the uptrend. I'm going to keep it where it originally was, which was right around here. Whoops, right in about this range. Again, just to kind of keep it as the margins as close as possible. So I'm still going to say this is in the uptrend. It's definitely, I can already just tell I'm going to make this green, meaning it's a buy for me. That said, again, I'm only willing to buy this one for so long. So right now it's early in that broken uptrend. It's technically, like I showed, if we pull back the bottom, it's still actually right there, right on the line. Didn't officially break it like I would think. And so right now, yes, I'd be willing to buy. If it pulled back to maybe say 310, 315, yeah, I'd probably add on to it because it's still within reason. But once it pulls back to like 300, I'd probably slow down on the buying, only because the more it pulls back, and when I say slow down, I mean like, if I'm buying 3 or 4 shares, if it gets to those levels, maybe I'm only adding 1 or 2. And I say that because the lower it pulls back, the more likely we could see it pull back all the way to 280. And that's when I would kind of reaccelerate. But again, that's way out there. I think it's still too early to make that call. But just kind of thinking ahead how I might view this situation if it transpires that way. So buy points for now. Again, I'll keep the 280, 281 to be exact, but that is not my focal point. Right now, it'd really be that 333, which would be the bottom of the uptrend, and we're below that. So I'm all for picking this one up. I also had 342 as a buy. I think I just had that in there again because when we see new all-time highs, it has the potential to pop. This did not pop. It, in fact, flopped. So I'm going to just remove that one for now. So just 2 buy points, 281, 333. So being at 322, I like it. I like it. So I'll pick this one up. Resistance we had at 343. So it's interesting how I chose both points because they're right at the same level. And essentially, we thought that could happen, is it would reach all-time highs and get rejected. That's pretty much what did happen. It definitely reached new all-time highs, going to about 345, but it got rejected. So we can move this up just slightly, but we'll try to cut it in half, so about like 345. Yeah, if it gets to that range, it might get rejected again. The longer it takes to get back to that level, the more likely we're going to say this uptrend is over. It's still too soon to say that, but I mean, unless, say, the Activision deal goes through and people love to hear that, that'll probably be the only thing that could maybe reaccelerate this one, which, yeah, that's a couple weeks away. We should circle back to it by then. Yeah, we'll just have to wait and see how that one plays out. But resistance points, right now for this week, I can update 343 to 344. That is just the black line. That is retesting previous all-time highs, roughly, within like $1 or $2. And then 370 is the top of the range. For this week, exactly, it's 365. Fast forwarding ahead a couple weeks, because I think we'll circle back to this one maybe by the end of the month. That'd be around 374. So I'm just going to update 370 to 374. We can update the date. The note of the short-term uptrend since January by dips, I'll keep that in for now, but I'm going to add in may have broken the uptrend and pull back. At this point, I don't think there's enough to get behind that. But again, it really just depends on how much they're talking about spending on Capex. I don't think it's as much as people are making it seem, but that is the worry, that they're going to spend so much on Capex and AI type things that it's going to ruin their margins. I don't think it'll be that bad, but yeah, we'll see. So yeah, just a quick recap here. Microsoft seems like it's at a buy point at this time at 322. Buy points I have are 281 and 333. 333 would have been the bottom of that uptrend, which again, if we pull down a little bit, it's right at 322. Support type level would be back at like 281, which if it keeps pulling back could be in play. But for right now, we're just going to play it the way we see it, and it's at the bottom of the uptrend. We have that note that it's in the short-term uptrend since January to buy the dips. This is definitely a dip for the company, so I'm going to play it that way, pick some up. Resistance we have at 344 and 374. 344 is previous all-time highs. It could get rejected there again if it reverses course here over the next week or two. And then 374 would be the top of the uptrend range. Seems very far away at this point, but that would be another resistance type of price point. We also added to our note saying it may have broken the uptrend and pulled back to potentially 280s. We'll see. I'll definitely dig into the operating and AI type spending. I think I know exactly where to look for it, but I will double check that. But yeah, that pretty much wraps this up. So if you have any questions or want to just add a comment how you're seeing this, interpreting it, or if you know what the Capex and AI spending is going to look like, that'd be a big help to just let me know. Otherwise, please like, subscribe, and I'll see you on the next one.